Today in crypto. Bitcoin, BTC, may be flagging below $50,000, but its bull market is actually 3 years old this month. Data from Cointelegraph Markets Pro and TradingView confirms that Bitcoin bulls have at least something to celebrate as 2021 draws to a close. Continue reading on Cointelegraph. On-chain data shows that $44.2 million in Bitcoin was dumped in just 1 minute, following which the price of BTC declined to $46,000. As pointed out by an analyst in a CryptoQuant post, on-chain data shows that around 1923 BTC entered exchange wallets today. The relevant indicator here is the inflow metric, which measures the total amount of Bitcoin being transferred to exchanges. Since investors usually transfer their coins to exchanges for withdrawing to fiat or for purchasing altcoins with them, big inflow values can be bearish for the price of the crypto. On the other hand, low inflow values can be bullish for Bitcoin, as they may mean there isn't much selling pressure in the market at the moment. Now, here is a chart that shows the trend in BTC inflows over the past day. As you can see in the above graph, the inflow indicator showed a massive spike today that measured to be around 1923 BTC. This means that some holders deposited to exchange wallets what was around $91.7 million at the time of the transaction. Not long after, the price of BTC dropped down to $46.7k. Related reading. Data shows Bitcoin short-term holders realizing significant losses. A look at the take-or-sell volume chart reveals some additional info about this decline. This metric is another on-chain indicator that shows the total amount of sell orders on perpetual swaps. On examining this graph, it becomes apparent that around $44.2 million in sell orders were placed on perpetual swap exchanges about 50 minutes after the aforementioned inflows. All this Bitcoin volume was dumped within the matter of a minute. Related reading. Bitcoin heads for short squeeze. ETH could outperform in this scenario because of the short time frame. It's looking likely it was just a single investor selling these coins. It's also possible that rather than a single holder, it could be a group pulling off a coordinated dump. The analyst in the post believes this might cause further fear and inflows in the Bitcoin market, and so investors should remain vigilant. At the time of writing, Bitcoin's price floats around $47,000, down 4% in the last 7 days. Over the past month, the crypto has lost 21% in value. Here is a chart that shows the trend in the price of BTC over the last 5 days. Bitcoin has been in consolidation within the $45,000 to $50,000 range for a while now, and the trend doesn't look to be breaking anytime soon. On-chain data shows Bitcoin hash rate has dropped more than 20% in the last 24 hours, a sign that could prove to be bearish for the crypto. As pointed out by a CryptoQuant, the BTC mining hash rate has severely dropped in the past 24 hours. Such a trend has usually been bearish for the price of the coin. As you can see in the above graph, the Bitcoin hash rate has dropped around 20% in value in the past 24 hours alone. This decline in the hash rate comes not long after the indicator completely recovered from China's mining crackdowns and set a new all-time high. Historically, high hash rate values have been associated with bullish trends, since such values imply it's profitable to mine on the Bitcoin network at the moment, and more miners get attracted to it. So, a decline such as the one now would mean it is no longer feasible for some miners to run their facilities, and therefore they have opted to shut down their operations. Related reading. The debate over toxic Bitcoin maximalism rages on. Both arguments after the jump. Bitcoin miners going offline to this degree so rapidly may turn out to be bearish for the cryptocurrency's price in the long term. At the time of writing, Bitcoin's price floats around $46,000, down 6% in the last 7 days. Over the past month, the coin has stacked 22% in losses. The below chart shows the trend in the price of BTC over the last 5 days. What is sentiment? Sentiment analysis applies to NLP or natural language processing of various types of online data including social interactions. Sentiment can be positive and or negative and takes into account large amounts of data across multiple channels. Ultimately, what drives sentiment is emotion, and this is the driving force behind everything the user does online and can affect what they chose to invest in. Sentiment is an important indicator when it comes to determining what the crypto market might do next. It shows how investors are feeling towards a particular asset or a market in general. In crypto, sentiment is a big driver of the price of digital assets and is important to consider when investing in a cryptocurrency. The Crypto Fear and Greed Index, for example, is a tool that measures market sentiment using a number of factors. When sentiment turns to greed, investors are looking at the market positively and therefore are investing more. This would be an indicator of a bull rally or an impending surge in price of an asset. Platforms like DeFi Trends offer sentiment analysis to users which they can use to make more informed trade decisions. Using data-backed analysis like this gives traders and investors a potential edge in the market by providing them pertinent information about the communities that support specific tokens and how they feel about them. Being able to understand the emotions of users towards a particular product has always been a powerful marketing tool, and this spills into crypto investing. DeFi Trends provides a comprehensive sentiment analysis ranging from social sentiment and corporate, institutional sentiment. This data, combined with other data that is collected by the platform, is then presented in a way that even new investors are able to understand, breaking the barrier to entry. DeFi Trends broke into the crypto space with its education and intelligence data offering. The all-women-led analytics firm was named one of the 2 winners of the 2021 edition of the Startup Showdown held in Miami. Hosted by Panoramic Ventures, the company walked away with a $120,000 cash prize for emerging in the top position in a pool of 200 talented applicants. DeFi Trends uses on-chain and off-chain data to deliver a comprehensive product that guides users through their investing journey. It covers the cryptocurrency market in totality, providing insight into the trends that move the market. DeFi Trends tracks social sentiment, worldwide trends, sustainability index, real-time data and forecasting, and its trademark index known as the DeFi Trends Index. All of this data is condensed into an all-in-one intuitive and real-time data and AI analytics web and mobile application, giving crypto traders access to real-time actionable insights and high-quality education to empower them to make informed investment decisions. Traders are able to tailor the services provided by DeFi Trends to suit their specific needs. Indicators are split into different tiers depending on the needs of the trader, as well as a customizable personalized dashboard. If you want to get leading crypto and NFT market information in the real-time, sign up now for DeFi Trends early beta launch. Sign up now. DeFi Trends, empowering better cryptocurrency investment decisions. Bridgewater Associates founder Ray Dalio has had a seemingly ever-shifting stand on Bitcoin and cryptocurrencies. Dalio went from full skeptic to investors as he acknowledged that BTC has potential as a hedge against inflation and central banks' monetary policies. Related reading about its most recent publication, Principles for Dealing with the Changing World Order, Why Nations Succeed and Fail, the 10 Stance Between the U.S. and China, and Bitcoin. Dalio referred to the cryptocurrency and its milestones across the decade, increase adoption post-launch without compromising its security, as an amazing accomplishment. However, he highlighted the potential role of the asset's underlying technology in the future as a potential driver of a revolution. Emphasizing that both Bitcoin and blockchain technology have earned credibility, Dalio said the following on their place as investments. Dalio has been one of the investors trying to warn people about the danger that inflation poses for the entire world. In that sense, he believes people should be worried about this metric, the way central banks are creating debt, and why cash is trash in the current economic environment. As reported by Bitcoinist, the U.S. recently published its Consumer Price Index, CPI, metrics that recorded a 6.8% increase year-over-year, one of the highest spikes in decades. The price of Bitcoin reacted negatively as investors expect the Federal Reserve to intervene by tapering their asset purchase policies and increasing interest rates. Inflation concerns have been a tailwind for Bitcoin in the past year and most likely will continue to benefit the cryptocurrency as Bitcoin becomes the ultimate hedge against the policies that took the global economy to its current state. Governments could decide to shut it down or at least attempt to. Dalio fears the cryptocurrency could face a wave of bans across the globe when it becomes relatively attractive. Therefore, he ruled out the possibility for Bitcoin to be adopted by legacy financial institutions in the near future. The Bridgewater Associates founder thinks Bitcoin has no intrinsic value, an argument made by other investors of long experience and government officials. Still, he will hold on to his Bitcoin because the cryptocurrency could protect it under a worst-case scenario circumstance. Related reading: This is what could kill Bitcoin, says legendary investor Ray Dalio. As of press time, BTC's price trades at $46,721 with a 3% loss in the past day. Hit the like button and subscribe to the channel.